What's up, everybody? My name is Zach Pasquarello, and I'm going live every day until I raise $5 million in my investment fund, Zip Capital. I've been running my bookkeeping business for the past 5 years. I've been teaching other people how to start a bookkeeping business on YouTube for the past 2 years, and I'm done doing that for a couple reasons. One, I'm just not passionate about it anymore. And two, I feel like I've already made 100 videos teaching you everything that I know about starting a bookkeeping business. I honestly felt like I was to the point where everything was becoming redundant. And yeah, I was making good money selling my course, and I was getting 2,000 views every video, which was great, and I was helping a ton of people, but I feel like I have reached my peak of my ability to help other people. So now I'm making these lives every day. So tune in at 11 a.m. Eastern Standard Time on my YouTube channel, and you can see the number back there on the board. $258,000. That's how much I currently have in Zip Capital, and my goal is to continue making these videos. So I love teaching people. So I will teach you how to do private money lending. And honestly, the majority of you, hopefully, are just going to go out into this world and just be private money lenders yourself. But there will be a select few of you who might not want to do private money lending yourself. So I have Zip Capital offering 8 to 12% fixed returns to accredited investors. So first, absolutely do your own private money lending. So that will segue perfectly into Jacques Cousteau. I think that I pronounced that correctly. You asked a question in the chat, and if anybody else has any questions, please feel free to ask questions in the chat. That's perfect. And let me know if you can hear me. I think that I am streaming. I think you should be able to see me. So let me know if you can see me or hear me. Hopefully it's working. But Jacques Cousteau, you said if you're running Zip Capital and only making 10% back on the money you invest into your business, then why not just invest in the stock market instead? The stock market averages 10 to 12% returns. That's a great question. So I offer 8 to 12% fixed returns to my investors. And so I always say, investing into my fund is not necessarily a replacement for your cryptocurrency or your stock market mutual funds. It's not designed to replace that. It's more so designed to replace your money market or your savings account or your bank CD, because I offer fixed returns. So you're not going to get the peaks and the valleys of a crypto or stock market. You're not going to get the volatility of a stock market. But also, from what you're asking, there might be some confusion in what I'm saying. I'm not earning 10% back on the money. So I'm earning 20% on the money, but I'm paying my investors 10%. So I make 20% minus 10%. I'm making 10% on other people's money, but I'm making 20% on my own money. And that'll lead us perfectly into how I made $9,000 in one day. Real estate, private money lending. Literally Monday, this just happened. I closed a $300,000 loan. And check out my Facebook, Instagram, and LinkedIn. They're all linked below. I post kind of more personal, more real-time updates on my social media channels, and I was just talking about this on Monday. I'll tell the whole story because it kind of happened in a weird way. I met with a financial advisor 2 weeks ago. We met for coffee, and we were just talking about business. He's a financial advisor. I'm a bookkeeper / Zip Capital fund manager, so we have a lot of overlap. And I was explaining to him my investment fund and how I do private money lending. And then he told me about, I can't remember if it was his aunt or maybe his grandma, some relative, lives in Mechanicsburg, my hometown where I live right now, Mechanicsburg, Pennsylvania. And they were looking to move out of their house, but they didn't want to go through the process of putting it on the market and hiring a real estate agent. So he asked me, do I know anybody who might want to buy this property? So this is an off-market property. A lot of real estate investors are looking for off-market properties. This is like the cream of the crop. This is what people want because these are usually cheaper than properties listed on market on the MLS. So met for coffee with this financial advisor, relative selling their house in Mechanicsburg. He said, let me know if you know anybody who might be interested. And so obviously me as a bookkeeper, private money lender, fund manager, I know a lot of real estate investors. So I immediately went to one guy who I've been working with for the past 12 months. We've worked together on 5 properties. I'm pretty sure I have funded all 5 of his investment properties over the past 12 months. Great guy, great company, really good at remodeling and construction. That's his background. So I reached out to him. I said, hey, here's an address. Here's what they're looking for. Let me know if you want to buy it. 48 hours later, he scheduled a meeting, went to the house, looked at it, made him an offer, and they sold it. And then 2 weeks later, maybe less than 2 weeks actually, they closed on it. And so I was able to lend him the money. I lent him $300,000. He purchased it because I gave it to him. So I was like the glue that brought the whole deal together. I found the seller, I found the borrower, and I funded the property. And then I charged 3% closing costs. So a $300,000 loan, I made $9,000, literally $9,000 in one day. And then I will also make 12% annual interest. So for the duration of the loan, this real estate investor will pay me $3,000 every month. And it's a 6-month loan. So I'll make 6% in 6 months plus 3% closing costs. That's 9% in 6 months. And then he'll pay me back. And then I'll do it all over again. So I'm making at least 18% on my money through real estate loans. And that's how I'm able to pay my investors into Zip Capital 8 to 12%. But with all that being said, I'm trying to teach you how I'm doing this so that you can go out and you can find real estate investors and you can find buyers and sellers and you can fund the deals yourself. But first, you need to get $300,000. So that is the barrier to entry. If you're watching this video, you might be a bookkeeper or an accountant, CPA, CFO. I don't know what your background is, but chances are you're probably coming from that background. So first, you need to get a business, or first you need to get active income. You need to start making money. Real estate lending is passive income. Real estate lending is the investment. So you need an active business. You're not going to get rich by just jumping into private money lending because you need to have money already. But the cool thing is you can get started with $10,000. $25,000 might be a better place to start, but you can get started with $5,000 or $10,000 doing little micro loans. But you need to have active income first. And then once you get that $25,000 or more, then you can start doing real estate loans, and you truly can earn pretty much passive income. You need to do underwriting. You need to find borrowers. But the cool thing is, as bookkeepers, entrepreneurs, I kind of stumbled into this network of real estate investors because I was already trying to get them as bookkeeping clients. So it's like crazy when I think about it. And you can do the exact same thing. That's why I'm making these videos. You can start a bookkeeping business or a fractional CFO business or a tax prep business. You can start that business, do marketing and sales to real estate investors, get them as clients, get the cash flow, learn the business, and then you already have this massive network. You've already done marketing to real estate investors, and then 2 or 3 years into it, then you already have the clientele. Then you can start lending to the people who are your clients. So it's a great way to mitigate risk in the beginning because you can cherry pick the absolute best real estate investors who are your clients. And you know that because you can see their taxes and their financial reports and their transactions and their cash flow and their bank statements. We are positioned perfectly to mitigate risk, underwrite these borrowers, and do private money lending. Legal documents is probably one of the biggest challenges, but I mentioned yesterday that I just leverage a local real estate attorney. So he drafts my promissory note, my mortgage, my personal guarantee. He does all of them. He does all of the legal documents. So that is very important. And then there's a mortgage. So this is what secures your promissory note, the mortgage. So you need your real estate attorney to draft the mortgage, and then you send that to the title agent. I don't really have a good analogy for how all of these chess pieces work together, but they absolutely do work together. So the real estate attorney drafts the documents. I'm just the lender. You have the buyer, you have the seller, and then you have the realtor who's kind of like off to the side. The realtor just kind of connects buyer and seller. But then the title agent, The title agent is the person or the company who coordinates the whole transaction. The money flows through the title agent, the documents flow through the title agent, and the title agent is the one who records the mortgage. So the promissory note is super important, but the mortgage is really important because that is what gets recorded at the county. Literally, like the government, the county, the office, the recorder of deeds. The mortgage is a document that gets recorded at the county. That way, if they ever go to refinance or sell that property, the new title agent would do a title search on that property and your mortgage would come up. So that's the security of your loan. So in order for them to sell the property or refinance the property, they have to pay you back. And you, as the lender, do something called a mortgage satisfaction. So you have to sign a piece of paper, get it notarized saying, yes, this mortgage has been satisfied. And then and only then, after you give that to the title agent, they record the mortgage satisfaction at the county, and then that mortgage is satisfied and there's no longer a lien on the property. But that only happens after you're paid back. So that's the beautiful, magical security of real estate lending, is that you don't own the property, but you have a lien on the property. So they can't sell or refinance that property without paying you back. Okay, so I see a question here, how to get them as bookkeeping clients. So in these live videos, I'm not going to be talking a lot about how to get bookkeeping clients, but check out my channel. I have 100 other videos that talk a lot about how to get bookkeeping clients. So I promise I'm not trying to ignore you, but I already have so many videos. So keep watching this live video. And then once this is done, go check out my other videos. I have a ton of videos that teach you how to get bookkeeping clients. Steele, good to see you. Looks like you said, this can translate to the industry I target, used car dealerships. Dealerships use a floor plan, which is borrowing money from a bank and paying that back weekly with high interest. Yes. I don't do auto loans. I'm not a fan of doing car loans just because I like the security of a mortgage. Like if I lend on a car, yes, I would have a lien on the car. I would own the title. Maybe, I'm not sure how that works, but to foreclose on a car, to repo a car, seems like a lot more difficult because you have to find the car and you have to go get it. And also if the car gets destroyed or damaged, like a car is a depreciating asset versus a house is an appreciating asset. So I would much rather get a house than get this. So side note, I had a trucking company 3 or 4 years ago. I thought about doing trailer rentals. I thought this is such a good idea. I'll buy a couple trailers, like tractor trailers, not the front part, but the trailer part. I'll buy a trailer for, I don't know, $30,000, $40,000, and then I'll rent it out. And every time I look at a business, I always go back to real estate. It's just what I love. Real estate is just so secure. And the big thing is that real estate appreciates. There aren't too many assets that you can buy that appreciate quite like real estate. So the trailer was cool, might cash flow really well in the beginning, but the trailer depreciates in value. So you're spending $40,000 to get something that's going to be worth $0 in 10 years. Versus if you spend $40,000 and get a house, it's going to be worth $50,000 in 10 years. Much better investment, at least in my opinion. Okay, so let's spend the next 15 minutes being real tactical. Let me go over some tips on how you can actually make money as a real estate private money lender. Because like I said in the title of this video, no joke, no BS, I actually made $9,000 in one day, but it took $300,000 to get there. So I lent $300,000 to a real estate investor on Monday. He paid me 3% closing costs. So I literally got a check from the borrower for $9,000 all in one day of work, less than 1 day of work. So how do you actually make money? So if you want to be a private money lender, you're going to charge at least 10%, if not 12% interest, and typical terms are 6 months. You could do 12-month terms. Definitely don't do anything longer than 12 months. In my opinion, there's just really no need to do longer than 12-month terms. There is so much demand for real estate investors looking for short-term funding. So I talk about having a niche when you're starting a bookkeeping business. Having a niche as a real estate investor is even more true. It's even more applicable. Having a niche as a real estate investor, like, you're going to get people come to you and they're going to want wild terms. 5 years, 30-year amortization, points at the end, 15% interest. Can you cover closing costs? So many different terms. But I just stick to what I do. I turn down loans all the time, or I should say people don't accept my terms all the time. 12% interest, 3 points upfront, $1,500 underwriting fee, $995 processing fee. There are so many people who are willing to accept those terms. And it's really just a simple supply and demand. That's really all it is. So if you have $100,000 and if you have 5 people who want your $100,000, you can be very selective. You can increase your prices. You can increase your requirements. You can be very selective with who you lend to. On the contrary, if you had $500,000 but only 2 people who wanted your money, you might not be able to be as selective. You might have to decrease your prices. So it all depends on the market you're in, how much capital you have, how risky you want to be, who you want to work with, how quickly you want to deploy your capital. But from what I've seen over the past 2.5 years, I've had no problem deploying my capital, 12% annual interest, 3% origination fee, $1,500 underwriting fee, $995 processing fee. One thing I will do, if they're a return customer, maybe I'll decrease their underwriting fee to $750. And then if they come back a third time, maybe I'll decrease their underwriting fee. Maybe I'll eliminate their underwriting fee and just charge them that processing fee. But I would say bare minimum, 12%, 3 points, $995 processing fee. I collect my fees at closing on the HUD. So you want to make sure that you tell the title agent exactly what your fees are. So principal amount of the loan, $100,000. There's a thing called prepaid interest. So on the HUD, if I do a loan, let's just say, for example, I do a loan on June 18th. And by the way, if anybody's watching, if you have any questions or comments, drop a comment in the chat. My goal for these videos is to teach you how to do private money lending. So if you have questions, I want to answer your questions. So ask me whatever you want. I'll do my best to answer all the questions. So if I do a $100,000 loan today, June 18th, I will charge something called prepaid interest. So it'll be 7, 8, 9, 10, 11, 13 days. So there are 13 days remaining in June. From June 18th to June 30th, that's 13 days counting today. I will charge the borrower prepaid interest. So I will take $100,000 times 12% divided by 365 to get the daily interest, and then I'll multiply that by 13. So daily interest rate times 13, that's the prepaid interest. So at closing, I'm basically going to deduct their June prepaid interest from the amount that I'm going to give them. And then I deduct $3,000 for origination fee, $1,500 for underwriting, $995 for processing. So when you look at the HUD as a lender, I always ask, please send me the HUD prior to closing. And then so on the HUD, you want to see that you're listed as the lender, Zip Capital LLC with my address at the top of the HUD. I'm the lender. And then you want to see all these things on their own line. Principal amount, $100,000. Prepaid interest, I don't know, $300 for 13 days. Prepaid interest. Processing fee, origination fee, underwriting fee to Zip Capital, processing fee to Zip Capital. And these should, so we're all bookkeepers, we're all accountants here. So when you're looking at a HUD, the principal amount on the buyer's side of the HUD, the principal loan amount is a credit. All these loan charges are debits. So you want to make sure that the HUD is right. So I know it's kind of intimidating the first couple loans you do, but that's why it was so beneficial for me as a bookkeeper accountant to have this experience going into being a lender, because I knew exactly how to interpret HUDs. So the principal loan amount, $100,000, that's a credit for the buyer, the borrower, the buyer, the person you're lending to. And then all these loan charges are debits. And then the wire amount is just the principal loan amount minus all these charges. So minus the prepaid interest, the origination charge, the underwriting fee, and the processing fee. And then that's how much you wire. So I might do a loan for $100,000. The promissory note is $100,000. They owe me $100,000, but I'm only actually wiring $95,000 because of all the fees at closing. So this is great because it gives you a cushion. It gives you some room just in case you do have to foreclose on the property. You already have $5,000 of profit paid back. So even if you do go through the foreclosure process and you are obviously going to have legal and attorney fees, the idea is that you never have to foreclose on a property. But if it does happen, then at least you're covered a little bit by the interest payments and the closing costs that they've already paid. So one thing that I will say, this might be controversial. I am relatively new, so stay tuned. Check back in a couple years to see if I've changed my mind. And also, to be clear, as a lender, as a bookkeeper, I have seen how many other lenders operate. So I am not just making this up as I go. Almost everything that I'm doing is based on what I've seen more experienced people do. So I only have 3 years of experience as a lender, but I've learned from people who have 20 years of experience. So what I've seen with highly qualified borrowers, I have seen some lenders lend 100% of the purchase price. I have even seen some lenders lend more than the purchase price. So for to cover closing costs. I have seen very credible local lenders lending more than the purchase price to borrowers who are highly creditworthy, who are experienced, trustworthy, have a good track record. So if you're purchasing a property for $100,000, I have seen lenders actually lend $105,000, maybe even $110,000, so that these buyers are actually getting cash back at closing. So you are going to buy a property for $100,000 and you're going to get paid $3,000 to go buy a property. It sounds crazy. I didn't even know it was possible, but I see it all the time. I see it people who I lend to. I see it my bookkeeping clients. They are getting cash back at closing, which means these lenders are already over leveraged on these properties, but they're only doing it with experienced investors, guys who have flipped 10 or more properties, guys who they've lent to in the past, guys who have experience, investors who are able to find off-market properties at a deep discount. So that's another key thing. Anytime I do a loan, I'm always asking the borrower, what's the purchase price? What's the current as-is value of the property? That's a really important question. You want to ask your borrowers, what's the purchase price, but also what is the current value of the property? Usually, when you buy a property on the MLS, on market, usually those two numbers are the same. But when these investors are buying properties at auction, foreclosure, off market, there's usually a pretty big variance between the purchase price and the current as-is value of the property. That can give you a lot of peace of mind, a lot of risk mitigation. If you're lending on a property that purchase price is $100,000, but current as-is value is $130,000, so they're getting it at a deep discount. So I can confidently give you $100,000, 100% LTV, 100% LTC, loan to cost, to purchase the property because it's already worth $130,000. I already have equity in this house if you default on the loan and I have to foreclose on the property. So I have seen people lend more than 100% of the cost of the property. So these investors are actually getting money back. And I do this too. So I do want to be honest with you. I lend 100% of the purchase price of these properties to experienced investors, to guys who I've worked with in the past, who have successfully flipped properties in the past. And They are willing to pay a huge premium if you are willing to pay 100%, lend 100% of the purchase price. It's risky. I wouldn't necessarily recommend that you do it with a first-time investor, or don't do it with somebody you've never worked with before. But if somebody has experience, I will have to say, I should probably start saying this in the beginning, everything I'm saying is just for educational purposes. Don't take my advice. Don't listen to me. Consult with a financial professional, financial expert before you do anything. So this is just for educational purposes. But for me, I have lent 100% of the purchase price. And because of that, these borrowers are willing to pay that premium, 3% origination fee, underwriting fee, processing fee. So stay tuned. Check back in 2 or 3 years. I'll let you know if my strategy is terrible or if it's been successful. I will say, I did not just start doing this on a whim, randomly, with no background. I'm doing what I see other experienced lenders in my market doing. So I'm just doing what they're doing. And I'm also very seriously underwriting these properties, looking at tax returns, bank statements, financial reports, investor experience. Okay, Steele, it looks like you said, I agree with the niche. It's like fishing. There's plenty of different fish in the lake, but it's the bait you use to catch the specific fish that you're wanting. That's a great analogy. There's plenty of fish. And if you want to cast a broad net or use a generic bait, it might seem like a good idea in the beginning, but as you get more experienced, you start to realize that you have to specialize your message, specialize your tactics, specialize your bait and your net so that you can really catch the fish, attract the right types of clients. So, collecting interest payments. I learned this through my bookkeeping business, and it's really been a great way, or a great strategy, a great technique for collecting interest payments. So I think this is the last thing I'm going to bring up. It's almost 11:30. The episode is almost done. So if you have any last minute questions or comments, drop a comment in the chat. If you want to ask a question about private money lending or how I'm making 12% annual interest and 18 to 20% returns on my loans, let me know if you have a question. The last thing I'll say is that I set up ACH authorization, and I learned how to do this through operating my bookkeeping business, because collecting monthly bookkeeping fees is really similar from a logistics perspective. It's really similar to collecting monthly interest payments. So I make all of my borrowers sign an ACH authorization. And so they give me their bank account, their account number, their routing number, and then they authorize me to withdraw the monthly interest payments directly from their bank. And so you have to set up what's called ACH origination. So you have to set that up through your business bank account. You have to go through a review process and send in tax returns and get approved before you can do it. But once you get approved, it's a game changer. So I recommend do this for your bookkeeping business and do this for private money lending once you get started. Just keep in mind, as the lender, you have all the leverage. You can make the rules. If your borrower doesn't want to give you ACH authorization for monthly interest payments, then you don't lend to them. It's really that simple. That's the beauty of lending. That's the beauty of being the bank. You literally have all the leverage, because without your money, the deal falls through. So you can pretty much make up whatever rules you want as long as they're legal. ACH origination, absolutely legal as long as they sign the authorization form. So get their signature and then set it up in your business bank account, and then you can withdraw their monthly interest payment every month on the first of the month. That way, you don't have to wait for their check. You don't have to worry about them forgetting, or worse, worry about them refusing to pay you. None of that. ACH origination, get the monthly interest payment, and then also you can include fees, non-sufficient fund fees, returned payment fees. I've seen some lenders charge $100 if your payment bounces. And it's not really so much that you just want to make $100. It's more so, I really don't want to deal with the headache of my borrower's payments bouncing. So I want to make that fee just painful enough that they take it seriously. Like, I don't want your $100. I just want your monthly interest payment. So just make sure your funds are in the correct bank account on the first of the month, because nobody wants to deal with bank fees and having to reprocess your interest payment. That's it for the video today, everybody. Really appreciate your support. Seriously, I can't tell you how much it means to me. Thank you for watching. I will continue making these live videos. I'm so bullish on private money lending. It's really what I'm passionate about right now. So truthfully, I just want to share everything that I've learned over the past 2.5 years. I want to share that with you so that once you start your bookkeeping business or whatever business you're starting, once you start that, then you can hopefully move on to more passive income like what I'm doing with real estate private money lending. So thank you all so much. I will see you all tomorrow. Same time, same place. Hope you all have a great day.